Thank you, and sorry for the delay. I was kind of a bit busy, so that was why. Okay, I'm still waiting for more people to join the section. Then we kickstart. Okay, I'm waiting for more people to join the section. Then we will. Okay, so thank you guys for joining. Okay, thank you guys for joining. On today's topic, we're going to be talking about demand and supply. We'll be talking about demand and supply in today's topic. So, can you hear me? If you can hear me, let me know you can hear me. Just reply on the chat section if you can hear me, please. All right. Okay. All right. All Z. Okay. Let's go. As you can see here, you see this the three that we had. I personally took on UJ has reversed, but I've left. Okay, I've left before this entire reversal. So that's why it's very important to take partial profits and also move your stop loss to break even, okay, if need be. Alright, so because you are not the owner of the market, okay, so you're not the one controlling the market, so at every point in time you should pay yourself. Okay, you should pay yourself at every point in time. Alright, so yesterday I gave assignments on some pairs. Alright, I gave assignment on some pairs. Right, let's just do something right now. Let's just do something real quick. And let's just see what could likely cause this reversal here. Let me highlight it. What could likely cause this reversal here? Okay, what could likely make this price rally up? So from our support and resistance lessons, let's see if we can identify major support or resistance levels that could make this price reverse back. Okay, so let's start from the daily time frame. We'll just do a quick recap, then we go to demand and supply, which is basically what we have for today. Alright, so switching back to the line chart, I don't want to delete most of these things because these levels are very important to me. They are psychological levels, okay, which I'll be showing you guys in the later section of our class. Okay, so now from what I thought, what we're actually looking for are major turning points. So now we could choose to use red here. Okay, major turning points like this. Okay, these are major turning points. Okay, major turning points. Right, let's see somewhere around here, this turning point here. Okay, let's see again which other major turning point on this chart here also, and then we could just use this also. Okay, let's just work with this. Right, for time's sake, which other turning points? I think we've highlighted majorly all of them. So let's switch to the 4-hour time frame, and then on the 4-hour time frame we have let's use this serve there 1 2. Okay, which other one? Here 1 2, then broke through. Okay, raise your voice a bit higher. Right, I'm finding it difficult to hear. Okay, sorry about that. Sorry about that. What we're actually working on is basically a revision of the assignments we gave yesterday. Alright, before we go into supply and demand. Okay, so now we are currently highlighting support and resistance. Oh, I think we made the color. We didn't change the color. Alright, so this is it. This point here. So let's change the color to blue. Okay, so we can differentiate the 4 hours from the daily time frame. Okay, we also have this guy here. Okay, he held there also minorly, and if we check go down to the 1 hour time frame, here could be a week. Okay, and it could likely hold price here for a push down, right? But let's see how it goes. Where else? Here also held there, held and pushed down, right? Let's see where also. Here, okay, so held there as a resistance, and the market pushed down. Here also held at this point, assisted the market here, okay, and pushed down for this ride. So that's it. Then let's see the 1 hour time frame. What we are looking for on the 1 hour weak rejection, like I said. So now what we are looking for on the 1 hour time frame are basically weak what rejections. So we're having a weak rejection here. Okay, we have this one here. Okay, let me change this to black. Which other rejection points? I have this rejection points here. So I retested here also. Alright, we have this rejection. Um, we have this rejection here also. Please increase your alright, sorry about that. I've increased my volume. Okay, so sorry about that, guys. I'm so sorry. Okay, so we have this weak rejection here. Can you hear me now clearly? Can you hear me now clearly? Compared to previous, can you hear me clearly now? All right. So okay, better. All right, so what we're actually looking for now are weak rejections. So we identify this weak rejection here. We also identify this weak rejection here. Okay, this rejection took out this structure here, okay, and gave similar to equal high, okay, but was taken out here. Okay, so this was a rejection and basically caused a change of trend. Okay, here also was also a rejection, took out this high, but the market filled in back. Okay, let's see again. Here also this is a weak rejection, but this is already affected by the 4-hour time frame. Okay, so let's see, and the way we identify weak rejections is that the wicks are most likely larger than the body. Okay, that's what I'm actually looking at for. At least the wick should be larger than the body. Okay, so um let's still see. Okay, we have a rejection here. Okay, now this weak rejections, where it's very important is when you are getting sniper entries. Okay, with weak rejection you can get sniper entries. I think it's okay. Okay, so now let's see. Remember the 4-hour time frame are the one the blue line. Okay, so you can see immediately the market touched into this 4-hour time frame here. There was a support and resistance level at this area here, okay, that held the market and pushed it up. As you can see, immediately it touched it, the market reacted to this level and was going up. So if you were actually trading support and resistance, this would have been an entry for you. Okay, this would have been an entry for you. Okay, now combining it with what supply and demand, which I'll be introducing to you guys today. Okay, so um, support and resistance are multiple areas where the market has touched. Okay, once the market touch that area more than once, it becomes a support and resistance level. Okay, support and resistance. But once the market just touches it just once, okay, the first contact with it is a demand and supply level. Okay, just like this area here. This area is a demand area here. Okay, let me close this so I can have a bigger chunk of my screen. Okay, so alright, so I have a bigger chunk of my screen. Alright, so here now, what I look out for in demand and supply are aggressive buying and selling. Okay, so it's what we call order block, or OB for short. Now the order block is basically a decision point, a price decision point, whereby the market decided to change direction. Okay, most people will say is the bank's mark. Okay, most people will say is the bank's mark, where the bank chose to change direction or whatever. But I see it as a point whereby there is an exchange of power. Okay, there is an exchange of power whereby sellers became buyers and buyers became sellers. Okay, or vice versa. All right, so now we have supply simply means sell, demand simply means buy. Okay, let's say for instance now you go to a store or a boutique or whatsoever, and you are asking for something. You are basically demanding for it. Okay, you want to buy. Okay, if the person that is the attendant there gives you that stuff, the person has actually supplied it to you. Okay, just like our everyday economics. Okay, supply and demand and every other single thing are what we do in our day-to-day activity. Okay, in our day-to-day activity we make use of supply and demand, and funny enough, it works in almost every single market. Okay, it works in every single market that I know of. All right, so what I'm actually looking for in supply and demand levels are aggressive buying and selling. Okay, you could come to your 2-hour time frame or any time frame at all, but the higher the time frame, the stronger the order block, or the stronger the demand and supply level. Okay, just like this level here, this is the last bearish candle before a bullish aggressive move. Okay, this is where we can call our demand and supply level. Okay, this bearish candle now, this entire bearish candle could be seen as the order block candle. Okay, bullish order block candle. Okay, the last bearish candle before a bullish move, aggressive bullish move. Okay, in most cases aggressive bullish move. Now we have something here. Okay, we have something here like this, but in this higher time frame here you can just get a picture of it, then you can go down to a lower time frame and modify it. Okay, so why price actually reacted down here could be because of this order block here, or because of this supply zone here. Okay, like I will always tell you, demand and supply is not a line, but rather a zone. Okay, so you should stop seeing it like a line, just one single line the market is meant to touch. No, it's a zone. Okay, a group of area is an area where decisions are being made. Okay, and in most cases, whenever it comes to this area, I look out for psychological levels. Now this is 15600. Okay, now let me highlight it for you. This is the 15600. So if you had your entry at 15600, okay, and your stop loss should just be somewhere close, about 20 pips for a stop. Okay, which is not bad. Okay, about 20 pips from the 15600. Let's say yes, 20, exactly 20 pips. Okay, you had your entry like this. Okay, if you had your entry like this for about 20 pips and your take profit level, let's just use this low here. Okay, let's just use this low here. This would have been a good ride down for about 100 and 42 pips on USD JPY. Okay, these are ways you can get good entries on trade. Okay, these are ways you can get nice entries on trade. Okay, so whenever the market gets to a particular point and change direction, we should understand that that point of change, or that point whereby the market changed bias, that point could actually be either a strong support or resistance level, or there is a demand and supply level within that area. Okay, so now what we're actually looking for are aggressive buying and selling. Someone may ask me, why did this market not push down here? Okay, now why it pushed down here, and see when the market came back next, it didn't really change direction. Why? Is because there's still a zone above it. Okay, the market has not touched. Okay, it reacted here slightly and then dipped in more, then pushed down. Okay, so it reacted to this zone ahead of this zone. So this zone basically was as a result of this zone here. So this was the zone that bettered, that gave birth to this zone. Okay, so that's why you can see that the market pushed down and reacted to this level here. Okay, so if we look further, if we look further, this is just the GBP USD JPY. Let's check out the GBP USD pair. Okay, let's check out the GBP USD pair and see what we can get there. Okay, so let's see what we can get. Let me clear my entire chart. Let me delete this also. Okay, so now what we have here now is, first thing first, let's check out for the demand and the support and resistance levels, or the support and resistance zone. What's our first step? Our first step is to basically change it to a line chart. Okay, so we change it to a line chart and then we identify turning points. Okay, so let's change this color to red. Okay, we identify major turning points. Okay, this is a major turning point. This also, this could hold for this. This also is a major turning point. This also is a major turning point. Okay, this also, they are both major turning points. Okay, this also, this also, but let me use this one below here because of the multiple touches. Okay, on the 4 hours I could now get this. On the 4 hours I could get this one here. Okay, then let's see again, this also, and let's see this. Okay, which other one do we have here? We have turning points, do we have here? Okay, let me just take this. Okay, let me take this as a turning point. Let me see, what do we have here? We have this here also. This current price is also a turning point. Okay, it held there, pushed up, held there just like a brick, held there, and let's see what the market could do somewhere around there. All right, so we are going down to what, the 4-hour time frame. Now on the 4-hour time frame, we also use the line chart. Now what we are looking for are turning points also. Okay, let's change this to what, blue. Okay, let me remove this section. Okay, so it can be clear. All right, so now we are having turning points. this would have been okay. This here, let's see, this here, held here, pushed up, retest, okay. Here also, where else? Yeah, we could use this one also. Which other place? Where else? If you've seen anywhere, just let me know. Let me know if you've seen any place. Okay, if you've seen any place. Okay, let's see what we have here because of this push down here. Where else? Let's see this guy here. Which older one? Which other one do we have? Okay, I think it's okay. I think it's okay. I think it's okay. Yeah, it's okay. Because if we go back in time, we will see how well it was effective. Okay, we will see how well it was effective. So I think that is okay. These are major turning points. Okay, those are the red ones are major zones. Okay, those red ones are the major zones. Alright. And they just have to be at least accurate because of the wicks that will be coming in with them. So at least should be about 70% accurate. Now we go down towards the 1 hour time frame. Switching back to our candlesticks. Now what we are looking for are weak rejections. This guy here, multiple weak rejection. Now let's change this to black. Okay, multiple weak rejections. Let's see which other place can serve. Here there's a weak rejection, but let's see. Let's just give it to the daily time frame. Let's see, is there anything here that could make use of this week? Okay, we're having rejections here, and the market is dropping. Here is also a rejection, but let's ignore. Okay, here's a very sweet rejection. Let's see if it held price in the future. Okay, so you can serve for this and serve for this also. Let's see this also serving here. Okay, you can see this also is a weak rejection from the future that we actually drew out. Okay, all right. I think that's okay. Yeah. So now basically from what I can see here is that this zone basically is a strong zone because it's a daily zone of support and resistance. That's why you can see the price, the market is reacting to this zone. Okay, the first touch came into this daily zone, okay, of what? Support and resistance. You can see it here. Now the market is reacting to this daily zone of support and resistance. All right, just by reaching into this daily zone, okay, if we can change the market, you can see that the candle just closed within this area, but the wicks are actually reaching forth. Okay, so the market is reacting to this daily zone. Okay, so let's see what areas are here. Okay, These are just weak rejections. Okay, these are just normal movements. Okay, but I'll be looking for the market to reach forth into this area here. Okay, this is my area of interest if I'm to take from this zone. Okay, this is my area of interest. Alright, so the market could likely reach in and then drop. Okay, so but it's not bad if the market start dropping from here. Okay, because I can see multiple weak rejections, and which is showing there's a change, but this zone is not looking too healthy. Okay, this reversal point is not looking too healthy. So wants to do something like this and maybe a continuation before it drops. Alright, so let's see. Alright, so now we're looking at what demand and supply levels, okay, that will likely hold the market for either a turning point or a continuation. Like basically what we are interested in are turning points, because most of us like being in the beginning of the move. Okay, most of us just want to be at the point where the market changes direction, so so you can have good entries and possibly ride the trend. Alright, so um now this is just it. This is why you see most people, you see their charts are all marked up. Okay, most of them are support and resistance lines. Okay, virtually every single thing has support and resistance line. So now when we combine it with trend line, okay, we can have good setups. Okay, when we combine it with trend line, we can have good setups. Right, something like this. Okay, something like this, multiple touch. Sorry, once the market gets to your support and resistance line or level on the trend line, you can easily take the trade. Okay, just as simple as possible, without indicators, without anything. But if you decide to add indicators still, let's see if our indicator can do justice. My own personal indicator I make use of is the stochastic oscillator. Alright, don't use normal indicators, I make use of oscillators. So let me give the settings. Alright, so if you are to take this trade at every point in time where the market touched your demand and supply support and resistance level, and also your trend line, you would have had good moves here also, here also. See here also the market pushed up here. Okay, the market is at premium, so if you are buying at premium, is at your own risk. Okay, the market didn't really dip in, but it reacted to this zone here, which is a 4-hour support and resistance level. Okay, but if you are trading off support and resistance, you'd have had good entries here, and you'd have ridden it, or you'd have rode it to any point in time where the market decided to change. Okay, so that's it, and now it's very important to understand trend line also while trading. Okay, because the market moves in trend. Even if the market is ranging on a higher time frame, if you come to a lower time frame, the market is trending. Okay, that's why we always talk about the trend in trend strategy. So the market is ranging or whatever it's doing, you can still make profit off the market despite the fact that it's ranging. Okay, and here I'm going to draw two trend lines cutting across, or let me just do it like this. Alright, okay, the best setups are when your trend line are just resting, or your setup is resting on your demand and your support and resistance level. Like for instance here now, you can see exactly the support and resistance level the trend line formed. Okay, and it's pushing. Okay, the market is pushing. Okay, let's see, even if we were to use a minor trend line, something like this. Okay, something like this. for this inner trend. Okay, so they broke it, came to the bigger trend line, and then pushed. Okay, now here also from this point also could be, here could also be a bigger trend line. Okay, for a bigger move. I don't know if you understand me. Okay, this is just for a smaller move. Okay, first trend line for a smaller move, this is a second trend line for a medium move, and this could be the third trend line for a bigger move, taking over all these lows here. Okay, so that's the way it is. All right, that's the way it is. Using your trend line. Okay, using your trend line, the market will likely break in. Just do something similar like this, but on a bigger way. Okay, in a bigger way. Right, in a bigger way, the market could drop down. So let's see how the daily candle closes on GBP USD. The daily candle closes and gives us, this is more like an indecision candle, but if the market closes bearish instead of bullish this way, it could likely be a reversal point to continue selling the market. So let's see what the market has for us. All right, like I will always tell you, don't try to predict the market. Analyze and let it play out for you. Okay, just do your analysis and let it ride. Okay, major moves actually react to daily time frame support and resistance. Okay, then minor move like mid-term moves react to the 4 hours support and resistance. Then you see those small short-term moves react to the hourly, 2 hours support and resistance, 3 hours, 1 hour support and resistance zones or level. All right, so that's something you need to understand. So the higher the time frame, the higher the move. If I'm to draw a support and resistance time zone on the weekly time frame, then you should know that the moves will be massive compared to the daily time frame. Okay, something like this. If I'm to spot out something support and resistance zones like this, and you should know that the move will be massive compared to um, the daily time frame or the monthly time frame. So the higher the time frame, the more critical the move are. So whenever the market comes to a higher time frame support and resistance zone, then you should know that we are expecting a massive move. Okay, but the lower the time frame, the market can easily walk through those zones. Okay, it could just be a stopping point just to breathe in and breathe out and the rest. Okay, so that's just it for support and resistance. Then kicking on with the demand and supply levels also. So the demand and supply level, like I always tell you, are aggressive buying and aggressive selling. So we have here, you see the way the market pushed out. Okay, so here could be seen as a demand and supply zone. So the market just makes use of it once. The next time the market is coming into that zone, it may likely ride it out like this. Okay, so here also a zone. Okay, but you can see that the zone was actually mitigated. The what they call it, the push was not massive, it was not aggressive, so but was taken out by this wick here. Okay, this wick came in and used the move. Okay, the market was meant to drop down, but this wick came here, okay, and used it. You see the market was reacting to this zone here, came down, touched into this level and used it. So the next time the market is coming back there to easily ride through. So that's it. Let's see here also we have a zone here. Okay, there's a zone here, there's a zone here also. Okay, so the higher the time frame, the stronger the zone. So if you have a support and resistance level zone and we have a demand or supply zone, okay, just know that that zone will likely be strong. Okay, the zone will likely be strong when there is a demand and supply zone and also a higher time frame support and resistance. Let's take a look at this. This red line here is the daily support and resistance level. So now let's mark up this zone in line with the daily support and resistance. Let's see if price reacted to it. Let's see. Okay, just a little reaction, was taken out and we tested the zone here. So there was nothing really here, but it just reacted just slightly here. Okay, you can see that price bullish momentum tried to come in, but the bears still held the market. Okay, so the next it did was to go down to the next zone, which is also this one here. So let's see this zone. Let's see if there's anything there, if the market got there. Okay, so it just dipped in immediately, it just touched the zone. Just 1 week rejection and the market did not come back there again. Okay, just by 1 week rejection the market did not come back there. Okay, so this candle, this bearish candle, I would have used this, but this candle is not showing momentum, it's not showing strength. Okay, it's not showing bearish strength. All right, so that's why I make use of this. Okay, so the market reached in just once and never came back there. All right, so these are the ways you recognize zones that are strong. Okay, you check out for bullish aggressive push, something like this. Yeah, something like this. We would have expected a sell at this point. So immediately the market came down here, it reacted. You can see the reaction point here. It reacted and became, the market wanted to sell, but the bulls were still strong. Okay, the bulls were still in control of the market. Most people would have expected a short from here, something like this. Okay, which is a trade that we could likely expect, but the markets didn't actually go in our direction, but rather went against us. So it's nothing to fight over, it's nothing to kill ourselves for. It's just part of the game. It's part of the job description. Losing is part of the job description. So basically today, all right, I'm highly exhausted, and won't be going in for a second section. Okay, in as much as I came in very late. Okay, won't be going in for a second section. All right, so tomorrow I'll try my best to make sure I'll be here, even if it's 10 minutes before um, the section. All right, so I hope you're able to get one or two things. For those that actually did submit their assignments, I'll be going through it and I'll be replying you privately. Okay, I'll be replying you privately and making your corrections. Okay, pardon me, I've really been stressed out today, but because I promised you guys that I'll be consistent with this. Okay, that's why I had to come on live and make sure I fix this. If you notice, I didn't even turn on my camera because I'm looking very scattered and stressed out. Okay, so let me just take some time to rest. Okay, I had elections today and surprisingly, yeah, by the grace of God, I did win. Okay, so it's a thing of celebration. We've been outside and stuff like that. So I actually need some rest. So thank you guys for joining in today. Hope you are welcome. Thank you, Mr. Sisters. Um, hope you this lessons I'm actually going through is actually helpful to you. Yeah, hope is actually helpful because it's very important that you learn. Right, if after everything I do and you guys don't pick one or two things, trust me, I won't actually be happy. Okay, I won't actually be happy. So no matter how small, every great person in life has a very small beginning. Okay, any wealth that was actually built from the top, trust me, you need to actually ask the person, what's up, how did you, like, how come. Okay, you have to start from scratch. Okay, so nobody start from the top, and even if you they gave it to you with the golden spoon, right, you need to start from somewhere. Okay, so this is part of my humble beginning.